Hi, welcome to this video day. It's 13th of February, Tuesday, 9:30 p.m. GMT. We're just going to be looking trade setup in a moment, which is USD JPY, which we've looked a lot at this year. And in terms of where we are now, we've hit our first profit target, which is 500 pips. Now, personally, I think there's a lot more downside in USD JPY to come. However, I do think a bounce is coming in the short term. Now, said it, beginning of the year, just keep your eye on the Japanese yen. It is going on higher on all major currencies, probably by 1,000 pips or more. Started to firm up on other currencies as well now, okay? And, for us, the JPY, the big fundamentals behind the chart, just so bullish longer term. They're not going to be turning around anytime soon. We've had a great, February, okay? Nice and volatile, which is exactly what we want as Forex traders. So we hope that continues. We don't want low volatility. Now, in terms of what we're going to be doing, when we're looking at USD JPY, just for new viewers, we are going to be using our favourite tool in Forex trading to back up our technical analysis, which is the COT, the Commitment of Traders Report. If you don't know what it is, you can click on a link beneath this video and learn more about it. Now, in terms of COT, what it does, it measures sentiment behind the chart. So not only can you work out where bullish or bearish extremes might be and get yourself a really, good risk-reward entry, it also allows you to basically project how far a trend might run. You can't project a 500 pip move from just technical levels alone. You need to know the sentiment. The COT will tell you that. Now, we're going to go to the charts. Now, in terms of the COT, I'm going to do the COT data first of all. Now, obviously, you'll learn more about it if you click on the link beneath this video, but just if you want to watch the video through right now, just keep in mind what we want to do is we always want to trade with smart money commercial hedgers when their positions diverge significantly away from speculators. You'll see what I mean now, because we're going to go to the COT data. So we're on the COT Net Traders data now. On the COT report, it's always the foreign currency first. So what we effectively have is JPY USD. We've obviously got to reverse the chart around the moment to USD JPY when we draw our levels. It's just to see how the smart money commercials are moving against the speculators. Now, in terms of when we really got interested in buying the JPY, selling the USD, it's on this B arrow here. Now, if you look at how long the commercials are, okay, they're longer than the peak here, A, okay, where commercials really step up. Commercials have got more longs here than on A. Speculators obviously dropped against the commercials, okay, so they're selling the yen and buying the USD here, and they're a bit more extreme over here. And we noted that the move from A, commercials get almost the exact bottom, goes up to here, okay, so it basically to this level of resistance, okay. We thought the same would happen again on B. The yen is almost at a similar level to A, bigger commercial buying, bigger speculative selling. Off we go, first target hit, okay? Now, in terms of do we think there's more upside in the yen, more downside in the USD? Yes, we do. Now, what you'll see is because they're hedgers, they're going to start moving their hedges as the price rises, okay? They don't move them that aggressively. They're still pretty long, okay? They move their hedges a lot more aggressively here. So we've still got decent divergence between the two groups. We think there'll be it'll bounce in USD JPY, but that'll be a selling opportunity. Right, let's get the chart the right way around now and draw some levels. The right way around now, USD JPY. I'm just going to draw my levels in a moment. Just want to go first of all through the yen bullish fundamentals as we see them. And I personally think this is the way the commercials are seeing them as well. Now, risk on, when the markets are really bullish about stock markets, okay, and the outlook for the global economy, failed to push the yen lower, so the bearish news discounted, okay. Sure, Japan has got one of the biggest stimulus programs in history in place in terms of monetary policy. In fact, it is the biggest relative to GDP, but it wasn't pushing the yen lower. So the bearish fundamentals are discounted. Stimulus reduction is coming, which is heavily yen bullish. Okay, the market still isn't seeing this. Okay, if you think what happened when there was the mere hint that the ECB would reduce stimulus, you had a 1,000 pip rally in the euro. You're going to get the same in the yen, and they've already discussed it according to leaked media reports. They need to get out of stimulus because their economy is now doing well. Inflation is on the rise. They can't just keep the stimulus program in place. They risk a trade war with the US. So that's very bullish for the yen. And of course, we're in a bit of a period of risk off at the moment, a bit of nervousness. That's obviously good for the yen. It's the number one safe haven. Now, of course, US rate expectations, if you've watched our other videos, we think the market just not seeing how quickly the US is going to raise rates. Now, if that changes, obviously, it'll boost the USD, but not too much on the JPY in our view, because that will create more risk off and nervousness. So that should firm the JPY. Okay, right. Let's go to the chart. Here's your COT extreme A, which we just looked at, up towards the 114, a few pokes above, then down to 108.50. Now, when it got up here, you can see it's struggling to take out 114. Now, when you know the COT, struggling to get higher, you can really look for a move to the downside, which is exactly what we did. We caught a trade through here, which is the 20-day moving average. Just let it come off the round number, get through the 20. She fell down quite nicely, bounced back, we got a profit. And then she ran onto the upside, but she then starts to struggle into 113.50, okay? We just thought she would fall from here. Yeah, basically, there's where we come in, and then we go down, okay? So, second trade, a nice fall. Now, when we got to our target, which was 108.50, which is a cluster of candles here, decide to take our profit in, and then sell weakness or a bounce, okay? And as we went up above 109, I wanted to sell back through 109. Also put an order to sell her higher. Very lucky with this one at 110.50, which is 20-day moving average, okay? And these candles here. So yeah, once a market starts moving into a downtrend, okay, you can normally expect prices to peak out into the 20-day moving average, yeah? And that's the two big red bodies and a few tails here. Get short. This red candle here can't get above the 20. This one here pokes back to it, can't get through it. And now we're down at 107.81. So from our perspective, the second trade, yeah, we're a bit lucky, but it worked out really nicely for us. And yeah, what am I expecting now? Well, tomorrow in the member centre, I may well take this trade in. Just going to say, obviously, if you want our daily analysis, our specific levels on this pair and 12 other major pairs, you get live access to the link beneath this video and all our techniques. So in terms of what I might do tomorrow, is I might take it in because, yeah, it's a decent profit on the second trade. Yeah, not too far away from 130 pips. Then we can look to sell weakness or a bounce. Now, in terms of selling weakness, I don't know the exact level yet until the morning. I'm not sure how far or if we're going to come up, okay? At the moment, I just see it as a sell through this red candle here. But, yeah, from the way the chart looks, we've had a decent move to the downside. Dollar a bit oversold. We've got US CPI tomorrow. I think that could come in as a little bit of a surprise and help the USD. Yeah, we're oversold. Okay, you can see it here. Stochastic oversold. RSIs are oversold. We're at an outer Bollinger Band and just come back within it. Points to some sort of rally. So where could we rally to? My own view would be, sorry, let me just draw a trajectory line in. You got the 20-day moving average here now. two bodies there as well. Yeah, this level obviously came off the 20. I think she could go for the 20. Again, it's a double trend line resistance. That would allow the USD to correct oversold. Okay, so you have to see how she goes. But if she rallies up and stalls, then basically I'd just sell her on weakness. Now, where would you put your stop? I'd put it back behind here. Okay, so you want to be at least one level back. The way these markets are, they're very volatile. You don't want to be caught, with other people's stops. I think that's plenty of room. It'll give you decent protection. Okay, but also the upside or downside in USD JPY is very good. How far do I think we could go to the downside? On the weekly chart, the levels really are 105, then par. Okay, so 100. So just from current levels, that's well over 700 pips. Yeah, we're looking at this as a long-term trade. Okay, obviously you get twists and turns along the way, but I don't see any reason to change the USD bearish view we took up at 114. The trend has started. Okay, you're always going to get corrections, but this trend could run a lot further to the downside in our view. A big strong trend, it's always a great idea to key off the 20-day moving average. And in terms of trading the yen, I've said it earlier on, but it's just so bullish. So we'll trade a few pairs, okay? I was going to do some of the other pairs that we covered in recent videos today, but I just run out of time. But yeah, for us, we've got USD JPY, Euro JPY, CAD JPY, and AUD JPY. So pretty exposed again, but the yen has done really well for us. And I'm looking for it to give us more profit. And just for new viewers, strongly advise you go and look up the COT and learn how to use it. It's such a fantastic tool because it allows you to find really great risk to reward entries. You also are coming off big institutional levels. If you look at the way we've done this chart, we're not looking too far backwards, okay? We're looking at the here and now, the reality of price. We're not drawing pretty patterns, just drawing big levels that matter and keying off them. And I think, when you've got markets, the Forex markets are volatile, they can be quite choppy. You want trades of 300 pips, 500 pips or more, okay? Now, obviously I'll take smaller profits like 150, 200 or whatever, but over the longer term, with the average volatility in a day, your stop's going to have to be 100 pips at least, probably 150, 180. You need the big trends to cover your losses. And I don't go with a lot of what's said online. You can trade for 50 or 100 pips and make money. I just don't believe you can. And when I see these so-called people who say they can do it, they never give you their levels. So they never prove it can be done. In my 30 years of trading, people who make the big money focus on the bigger moves. I think I've covered everything I need to. So that is the video for today. Thank you very much for watching me as usual. Take care and have a good day.